assets? A lot of people do not know the answer to this question because they never imagine that they're going to be in this spot. Now, some of you, maybe like me, it's been something you've been thinking about. It's a desire you had, a thing you've been interested in, and you might have some information on it, but you might not be fully educated in. If you were in a position today where you had to buy assets, it would be difficult. It would be tough. So I have a client right now. Last week, he got $3 million for his business. And so what we've been doing is we've been focusing on asset acquisition. And it really is the rubber hitting the road on. Okay, a lot of you guys, when you think of assets, you're like, hey, I'm going to go buy real estate. You don't think about, though, where did the assets come from? Okay, if they came from a sale, yeah, you might want to buy real estate, but you also might lose 20 or 30% of your money before you ever get to put it into real estate. So it doesn't make a whole lot of sense to just arbitrarily stick the money in real estate. Now, you might have also saved that money up, and then it might make sense to buy real estate. I have some people I talk to where all they want to do is put money into an account and then put it into real estate. That's totally fine. So I want to give you 3 things, though, to look at. When you're investing in assets, is never lose money. That's rule number 1. We got that from Warren Buffett himself. Never lose money. Okay? So that's like first thing on the list. So you're not looking at Bitcoin. You're not putting it in your 401k. You're not buying mutual funds. You're only looking at assets that don't lose money. Okay? Rule number 2 is make money always. Okay, so you're never losing. You're always making. Okay, and you may not be able to always make and never lose, but the better you can do at that, the higher gradient you can do at that, the better the asset is. So it might lose sometimes, but if it loses less than others and makes more than others, that makes it a better asset. Before you get into the asset, have an exit. Know how you're going to get out. Know what happens if it goes south, how you're going to recuperate your money and make sure that you're okay and you're protected. If you follow those 3 simple rules and you are rigid with it, meaning like you're 100% on track with it at all times, and that's not something you're willing to waver on, then you're going to have a much easier time buying assets than somebody that they just want to buy something they saw on YouTube or their mentor did or they watched on TV, whatever it is, right? But if you don't have principles for yourself on why you're doing it, it's going to be a lot harder. I'll paste that right now for you in the comments. And if you click on that link, it's jerryfetta.com/invest. That's actually going to give you a description of why you shouldn't be in the stock market right now and why you need to be looking at real assets. And if you're a person that wants to learn how to do that for yourself, I can help you. So check it out. Thank you for watching. Make sure that you do like, share, and subscribe. I'm going to talk to you again next time.